makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Donald Trump races towards a rematch with Joe Biden after beating Nikki Haley in the New Hampshire primary. Well, ASML soars as fourth quarter orders triple smash estimates. The chip equipment maker says it sees signs that the sector is recovering. Plus, Netflix surges, gaining 13 million new subscriptions in the fourth quarter, marking its biggest jump since the pandemic. So let's take a look at the European markets map. Again, a lot going on when it comes to some of the earnings. It was our first day of full earnings. A lot of the, upside, if you look at that, will probably come from earnings because of the good news pricing in, being already priced in if central banks do end up actually cutting as much as expected. Now, if you look at some of the things that we're watching, again, we've had some pretty strong earnings. We're also looking at China's latest move to stimulate the economy and whether that's boosting some of the stocks. Certainly resources or shares of resource companies are up. ASML soaring after Europe's most valuable technology company said orders more than tripled. Some of the other things, SAP also jumping. So we look at that. The other thing we look at is Euro data. Now, this is important PMI manufacturing for services and services ahead of the ECB on Thursday. Euro area January manufacturing PMI coming in at 46.6, a touch better than expected. It's still in contraction territory. And if you look at the services, they're falling to 48.4. So that's a little bit worse than expected. Composite overall 47.9. The forecast was 48. So really not far off what economists had predicted. But again, this difference between services actually doing worse, manufacturing doing a little bit better. Now, the former president, Donald Trump, has brushed aside rival Nikki Haley to win the New Hampshire primary. The result moves Trump a step closer to claiming the Republican nomination for president or for the Republican Party and raises questions about the viability of Haley's campaign.
She doesn't win this. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night. She had a very bad night.
I want to congratulate Donald Trump on his victory tonight. He earned it, and I want to acknowledge that.
So we're now joined by Bloomberg's Kriti Gupta, who's been following this very closely. So, Kriti, the next step is, of course, February 24th. This is the next time that actually we hear from Nikki Haley in her home state. So how likely is she to actually do much better then?
Well, the pressure is really on, as if it wasn't for the New Hampshire primary, because the margin of success, Fran, was really important here. Nikki Haley had to basically come out and close the gap. Instead, she lagged by 11 percentage points. President Donald Trump coming out with about 54.6% of the vote. Nikki Haley with only 43%. So now, not only in her home state of South Carolina does she have to show up, she has to show up by a pretty significant margin, because what's really at stake is not just her kind of progress in that state itself, but also the donor money that follows, and that's where she's starting to lose a bit of momentum.
So, Kriti, who's likely to be Trump's running mate? Kriti, I don't know if you can hear us. We may have lost Kriti Gupta. We'll get back to that. Of course, one of the big points that we need to make sure we understand is, first of all, who Donald Trump is running with, and some of the other things are, of course, what happens next. We also had, of course, the difference. We tend not to follow very closely what's happening with Biden and his team, but it was the first time that Biden and the vice president were also rallying. That was yesterday. Kriti, I don't know if we have you back. Bit of a mystery whether you're back or not. I think you're back. Wonderful.
I am back.
Do we know anything about? Do we know anything about Trump's running mate?
We do know a little bit about President Trump's running mate. There's a lot of speculation about who he's actually going to pick. There's a name, that is coming up quite a bit. Elise Stefanik seems to be the name that is starting to make a lot of the rounds. This is a Republican representative who is representing the District of New York. And remember, right now, in terms of the kind of political strategy around President Trump's team, the vote that he's really losing out on at the moment is the female vote. So there is some question about whether or not he's going to pick a female running mate. If that running mate is not Nikki Haley, which it seems like it may not be, given Nikki Haley's really ramping up some of her rhetoric against President Donald Trump. Elise Stefanik is the one that seems to be coming up time and time again, simply because she's making her name around her take against some of the kind of elite colleges and the leadership at the likes of Harvard, Princeton, and Yale, and the anti-Semitism around there in the fallout of the Israel-Hamas war, which again is a very hot topic issue, not just for the Republicans, but for the Democrats as well. Remember, they are actively trying to target Joe Biden's foreign policy record. So that is one name that is coming up. Of course, the others are going to be some of the other Republican candidates that had dropped out of the race. Tim Scott, Ron DeSantis, they're all kind of in the running, but it's still unclear who President Trump is leaning towards.
Kriti, thanks so much. Kriti Gupta there with the very latest, of course, on New Hampshire. Now, for more on this and what's moving the markets, we're joined by Charlotte Ryland, Head of Investments at CCLA Investment Management. Also with us, Bloomberg's Justina Lisa. Justina, thank you so much for joining us. Also, thank you to you, Charlotte, for being here. Look, I don't know whether we start game theorying, actually, what Trump does to foreign policy and the economy, or whether it's just a little bit too soon.
I mean, it's probably a little bit too soon. I mean, he has said some of the things that he's planning on doing, which seem to be about tariffs, and not just having tariffs against China, but having it more broadly into Europe as well. He's also talking about, obviously, doing things with migration, which has implications in terms of the employment market. So I think we'd say both of those are potentially quite inflationary and therefore, not entirely good for markets.
Are you expecting more fragmentation around the world and therefore more onshoring? And that's also, of course, fueling inflation. But could it also mean U.S. stocks do better than others?
I mean, I think in terms of that sort of onshoring debate, I mean, we've had, Biden has come in and has actually continued to be, fairly antagonistic towards China. We've got various restrictions in terms of the tech sector in particular, in terms of what can be exported out there. So I think in terms of that rhetoric and the reality in terms of China, maybe not that much of a change. But, does that mean that the US does better? I mean, I think it's all dependent on the sort of global growth outlook.
So, Justina, how are the markets looking at this? Or how will the markets look at this as we get closer to November?
Yeah, I mean, for now, I don't think markets are kind of pricing in a Trump victory just yet. But you certainly have no shortage of punditry beginning to kind of weigh on this. And I think a few things they're focused on is, what does this mean for European stocks, which are always a bit more exposed to global trade, especially with kind of the German economy kind of already not in a great state right now. And of course, the same can be said of China, which has already seen worse tensions with the U.S., but maybe Trump will be more heavy-handed. China, another kind of spot in the world that has seen sinking markets. And I think apart from that, it's kind of a bit harder to tell for U.S. domestic stocks. And I think a lot of people famously remember a lot of people got the direction of markets wrong after Trump was elected.
Yeah, and I guess I wonder what it means for Europe. I don't know where you stand, Charlotte, on what Europe will do. And again, if they're stuck between the U.S. and China, does it bolster European cooperation, and therefore does it lift some of the earnings, or is it going to be much more difficult for them?
I mean, I think, it's going to have an impact on things like policy towards the Ukraine. So, potentially, you'll see the US pulling back from the support that they've had there, which will then force, Europe to maybe step up a little bit. And then in terms of, the trade position, if he is more antagonistic towards those European exporters, then clearly that's a more difficult situation.
Okay, where do you see the biggest value overall of what you want to be buying into 2024?
I mean, I think, for us, it's some of the areas that had a fairly difficult last year. So the healthcare sector, I mean, there was a couple of areas there, whether it be the life sciences tools, which are struggling with destocking, but also where, biotech spending had begun to slow down. So I think, you'll begin to see sort of an improvement with things like Thermo Fisher, Danaher, those kind of companies. But equally, some of the devices companies, Novo Nordisk was the story last year, and of course, the obesity drugs. But and there's been this assumption that everything else is going to struggle because obesity will be falling. But actually, what you're seeing is things like diabetes pumps are still being used. Sleep apnea devices are still being used. So actually, we think there's a bit of value in some of those devices companies as well.
And Justina, when you look at what's supporting stocks, is it earnings from now on?
Yeah, I think investors are really loving this Goldilocks narrative right now, especially in the U.S. I think people can still see that. I mean, the economy, I think I saw this quote the other day, it was bulletproof. And it seems like the real economy is still doing well. And at the same time, even if the Fed does not cut rates as aggressively as we thought, at least it seems like, the rate hikes are behind us. And this is a great state for markets to be in. And that's why people kind of are starting to wonder, has it gone too far? Are valuations too extended? I think those questions are definitely getting raised right now.
Yeah, especially given the geopolitics. I mean, even without the U.S. election, there just seems a lot that could go wrong that markets are looking through.
Right, exactly. I mean, if you look all around the world, it seems like any place that's a bit more exposed to global economic growth is definitely slowing down. Of course, we have to see whether China comes up with more aggressive stimulus measures, which they haven't really so far.
All right, thank you both for joining us. Justina Lee there from Bloomberg, Charlotte Ryland from CCLA Investment Management stays with us. This is what Netflix is doing pre-market. Now, they have, Netflix yesterday had some pretty incredible results, adding more than 13 million customers in the last 3 months of 2023. It's actually the best quarter since the early days in the pandemic. Pre-market, you can see Netflix gaining 9.2%. The strong numbers beat estimates. They also beat sales across the world. So we'll keep an eye on Netflix. They're also buying some of the live events, which could give them a little bit more, I guess, fluctuation going forward. Now, much more to come. This is Bloomberg. So private sector activity in the euro area contracted for an 8th month in January. The weak start to the year comes after a likely recession in the second half of 2023. Now, for more on this, we're joined by Bloomberg's Jana Rando. Jana, always great to speak to you, and really congratulations on all of your scoops on ECB and others. But walk us through the PMI data that we've actually had today.
Right. It's really a mixed bag, Francine, a mixed bag of news out of the PMI data this morning. We saw manufacturing doing better than expected. We saw services doing worse. And overall, we saw activity contracting at the start of 2024. And of course, that builds on contractions in the third quarter and most likely on the fourth. Data will be out next week on that. So really, it looks like the recession the Eurozone economy is in extended into at least the start of 2024. Now, if you wanted to be optimistic, you could look at the contraction in new orders that was the smallest since June. So a little bit of positive news there. It stabilized employment. It helped underpin business confidence across the private sector. But also, if you're a pessimist, then you saw in the data that supply chains actually lengthened for the first time in a year, adding to inflation pressures. And that, of course, is a reflection of the tensions we're currently seeing in the Middle East with attacks on ships traveling or attempting to travel through the Red Sea. So a lot of mixed information in there, pointing to a difficult situation, a difficult start, and obviously a difficult decision or a difficult job for the European Central Bank this week to analyze and assess the situation.
Yeah, so Jana, does it make it more likely that actually, I mean, how does it change the ECB tomorrow? Again, it's kind of like it's at the margins, but it's a very delicate, I guess, forward guidance that they need to calibrate.
Yeah, I mean, it probably adds to the case for not really offering forward guidance because the situation is just so in flux and could change at any moment. A lot will depend on whether we are, on the verge of seeing another supply chain crisis, if we see prices surging, not just for goods and services, but also for energy, if the attacks in the Middle East get worse, or whether ships and vessels will adjust, suppliers will adjust, take the trip around Africa. And things will more or less find a new normal. So a lot of things are uncertain, and the president said as much last week in Davos, as you know. Not just watching supply chains and energy prices, but also wage growth and profit margins. So a lot of information that's still needed until policymakers can really make up their mind about the stance on interest rates. Of course, we don't expect much to happen this week. Interest rates are going to stay on hold, the deposit rate at 4%. And we'll see how confident they are in telling us where the direction of travel will be later this year.
No. Jana, thanks so much. Jana Randau there with the very latest, of course, on the ECB and some of those PMI data. Now, still with us, Charlotte Ryland, Head of Investments at CCLA Investment Management. Charlotte, I don't really know what you do with the ECB and some of the European stocks right now. Does it kind of, do you wait for near the summer to try and reassess, or is there a tactical play now?
I mean, I think, in European companies, it's going to be looking for where there are some long-term drivers. Yes, the industrial sector looks to be still quite soggy, and there's clearly a linkage to China, which probably won't be helping them very much. But if you've got companies like, say, a Schneider Electric, which are playing on that energy efficiency thing, we still think that, there is some value to come from those businesses.
Do you play Europe versus UK, or how do you play Europe in general?
I mean, I think for us, we invest globally, so we are, we're not terribly bothered whether it's quoted in Europe or the UK or where it is. If it's a great company, and there are some great companies in Europe, then they'll find their way into the portfolio.
I mean, the BOJ and actually Japan in general is probably one of the most exciting spaces right now. I mean, again, do you wait tactically, or is now the right time to move in before they change policy?
I mean, I think, Japan market has clearly done very, very well, and that's people anticipating that we will move away from this zero interest rate policy, that, they're about the only central bank that's still clinging to that. And there is clearly some corporate governance reforms that, the government is trying to push through as well. So there are signs that, that Japan could get to be more interesting. I think the struggle is, some of the great companies tend to trade at pretty unattractive valuations. They're well known to be the good companies. And there's a lot of businesses that are going to, they've got a lot of work to do to try and get returns on capital up to where you're getting in say, the US or Europe.
Charlotte, thank you so much for your time today. That was Charlotte Ryland there from CCLA Investment Management. Now, coming up, we'll bring you more on reports of a prisoner exchange deal between Israel and Hamas. That's next, and this is Bloomberg. Now, Reuters is reporting that Israel and Hamas have broadly agreed in principle to exchange Israeli hostages for Palestinian prisoners during a possible month-long ceasefire. The news agency is citing 3 unidentified sources. Now, let's get more from Bloomberg's news director for Europe and the Middle East, Roz Matheson. Roz, thank you for joining us. So what do we make of these reports of a deal?
Well, there actually are multiple reports that have been going around in recent days, and they vary in length in terms of the potential duration of a pause or a ceasefire in the fighting, anything from 1 month to 2 months to enable the sort of staggered release of the rest of the Israeli hostages being held in Gaza, but also for the release of further Palestinians who have been held prisoner, jailed rather, in Israel. And there's lots of discussion about what this deal might look like, when it might start, and whether either side would be willing to agree to it. And it's very unclear at this stage whether that can even happen, because Hamas is very insistent there needs to be a proper conversation, not just about a ceasefire, but about the end of the conflict before there can even be a ceasefire to end that conflict. And Israel is equally adamant that their goal is to eradicate Hamas completely, to ensure the October 7 attack that happened on Israel can never happen again. And so there's fundamental goals there that they say need to be achieved. And therefore, talk of a ceasefire is very difficult. So it's hard to know at this point, really, if those reports are going to gain traction or whether either side or both sides will agree to them.
Yeah, and Roz, the UN, of course, has warned that the Prime Minister Netanyahu's rejection of a two-state solution will prolong the conflict. It's also getting a lot of condemnation worldwide. So how much support does Netanyahu have on his view?
Well, he has probably more support inside Israel than outside, as you noted. The US, countries in Europe and elsewhere in Africa and beyond all say that some sort of two-state solution eventually is the only way to resolve this once and for all, and that's for a proper Palestinian state. That's something that Netanyahu says that Israel cannot fundamentally agree with. And so he's really isolated increasingly globally on that front, despite the pressure from the US, Europe and others to put it on the table. He says, frankly, no, I'm not going to do it. However, it probably does have a good amount of support inside Israel. What we've seen is a real hardening of support around the war inside Israel in recent months. That's not necessarily support for Netanyahu himself as Prime Minister, but for the war that's going on, and certainly a sense that Israel can never put itself in the position again of being at risk of attack as it was on October 7, if that is either from Hamas in the future or Iran or one of Iran's other proxies, including Hezbollah. And so he's pretty determined, and he seems to have the support at home on it.
So, and today's big take, Roz, also looks at the economic impact of missile and drone attacks against civilian ships in the Red Sea. So what's the impact been, and what do we know about what it would look like in a couple of months?
Well, it is about 12% of seaborne trade, so it's a significant amount. And it's been going on for weeks and weeks. And what we're seeing is this protracted disruption to trade in the area. So ships having to take a very long way around. And that's impacting not just tankers with oil and gas. I mean, that's critical, obviously, for supply in the region and globally, but also things like parts for cars, parts for companies, livestock, fresh produce, stuff that doesn't do very well, sitting on ships for extra weeks at a time. And we're seeing that having a knock-on effect on the supply chain globally. Ports, companies, countries many, many miles from the Red Sea are having to make adjustments to their supply chains. And what it really shows us is that despite efforts to diversify supply chains, we're really still very interconnected globally on that. And one thing that happens in one part of the world can really impact the rest of the world. Does that have a knock-on effect at some point on inflation, for example? So possibly very wide-ranging effects for a long time to come.
Roz, thanks so much. Roz Matheson there with the very latest, of course, on the Middle East. Coming up, we talk private equity. We're at the world's largest private equity capital conference in Cannes. This is Bloomberg. Well, Donald Trump races towards a rematch with Joe Biden after beating Nikki Haley in the New Hampshire primary. ASML soars as fourth quarter orders triple, smashing estimates. The chip equipment maker says it sees signs the sector is recovering. Plus, Netflix shares surged pre-market after it added 13 million new subscriptions in the fourth quarter, marking its biggest jump since the pandemic. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the private equity and private credit market has grown more than threefold since 2015, with private credit managed assets expected to reach $2.8 trillion by 2028. Now, that's the backdrop of the EPAM Private Equity Conference in Cannes. Let's go straight to Bloomberg's Danny Berger, who's at a conference with a guest. Danny, I know it's a tough gig in Cannes in January.
I know. Work is so hard, Francine. I'm half tempted after this interview, where my next interview and I are probably going to get on one of those boats and sail away. And that is Carmen Alonso, Tikehau Capital's head of UK and Iberia. Carmen, I know you've got lots of work to do. Don't worry. We're not going to sail away today. Look, we're in this interesting time for this market because last year was okay, even though it was a slow year. We'd recently spoken to Apollo, though, that said that people overpaid for assets in private markets, and now the air is starting to come out of the balloon. Is he right? Is the air, the proverbial air, finally starting to come out of overpaid assets?
Hi, good morning, and thank you for having me here. Valuation is obviously the key topic of discussion, and I'm sure we will be hearing a lot about it at IPEM. I would say that obviously valuations were at the peak in the 2021 with this sort of peak of activity in M&A as well, and that sort of inflated prices. Where we are today, where there is a subdued M&A environment, is having an impact as well on valuations. But private markets, the beauty of the private markets is that you have time to walk through all of that. You don't need to enter at the peak of a valuation, for example, and then have pressure to exit. You have the time to actually work, have a positive impact and add value to your portfolio companies. You are able to create growth, improve the situation and the competitive advantages.
Is time starting to run out? And I know that's kind of trashy to say, but this idea that it's been a slow market, LPs, investors, they want their money back, they want exits. Is it starting to become crunch time for that?
It's true, there has been a significant pressure on liquidity in the market, particularly for the LPs, so there is pressure on the GPs to offer that. Given where we are today in terms of a little bit more certainty when it comes to inflation, inflation went up a lot last year, but it has come down as well. There is a little bit more visibility in terms of or expectations of people in terms of where interest rates are going. And with that kind of certainty in the backdrop in macroeconomic conditions will enable us to have a little bit of an overview in terms of where valuations are going, and people will be able to factor that in the valuation. So yes, I think there is a little bit more clarity in terms of what companies are valued at.
I guess there is that uncertainty, though, of geopolitics and what that means for inflation. Every day we hear and see a new headline about issues in the Red Sea, another Houthi attack, another US-UK strike. We did see some UK retailers, Next, Marks & Spencer, Tesco, all of them said that, look, customers might need to start paying more because of this issue with shipping routes. Are you seeing that in your portfolio companies at all?
we are in a situation which is extremely fragile, and I was just referring with a little bit more certainty in terms of the direction that inflation and interest rates are going. But that is very fragile. Any of the shocks that you are mentioning, for example, what's happening in the Red Sea, is going to have an impact again on supply chains. Will probably have an impact on inflation up again. So we need to be very careful, because this is definitely, we are not out of the woods. Our portfolio companies have learned to be resilient, have learned to be flexible, and have learned to adapt to the difficult situations. And so, when we work with the companies, we try to make sure that they have that flexibility and adaptability, which is critical in today's market conditions.
So what does that look like? Is that the onshoring, friendshore kind of model?
Yes, that's part of it, but that is, again, inflationary if you think about it. There are a lot of, that's why I'm saying that the situation is fragile at the moment, because a lot of the trends are very inflationary, which puts pressure on the fragility of the system right now. So onshoring, reshoring, demographics as well is inflationary. Energy transition is inflationary. And so you have to be really careful when you plan sort of the management of your assets. Short-term, mid-term, and long-term.
It's a lot to think about. And just to add another one to the mix, Carmen, is the uncertainty of an election. More than half the world's population goes to an election. One of your main markets, the UK, is likely going to have an election this year. What happens to deal flow? What are you expecting for deal flow in an election year? Does it change? Does it alter things?
I mean, it's fair to say that the uncertainty and unpredictability of elections will have pressure on deal flow and activity in any given market. When there is no uncertainty, investors tend to be significantly more subdued when putting capital at risk. So that will have an impact. The UK is in a slightly unique situation where we just managed at the end of 2023 to come out at around 1% in growth. So we managed to avoid the recession. But on the other hand, we have inflation down to around 5%. So it sounds like we are in a better position that we entered 2022. But the situation that it has is been underinvested for many years. There are demographic pressures as well, skill set, a lot of industrial actions, and then on top of that, an election. We don't know when that election will take place, what time during 2024, or beginning of 2025. Until we have an election, we are going to maintain that uncertainty and what is going to be the policy going forward in terms of investment and all of that. And therefore will have an impact on our markets.
Right. I mean, what difference does it make if Labour wins the next election? Is that good, bad for business?
Difficult to say, because there are so many measures that need to be taken, for example, public investment, taxes, all these different sort of parts of the policy making that one will need to understand much better ultimately what the decisions are. But this is an opportunity for business, right? For us, we have UK represents a strategic market where it's our second largest office. When there is uncertainty, there is opportunities. A lot of people are on the sidelines, so we are there on the ground with 75 people looking to deploy capital and find interesting and attractive opportunities to invest.
One of the other sort of regulatory government policy things that tends to come up, and this came up in Davos again and again, it won't surprise you who it came from, that private capital needs more regulation. It was, of course, the bank CEO saying that. It's, the classic Jamie Dimon, private credit's dancing in the street with more regulation in banks. Do you think there's any truth in that? Does there need to be more regulation for the industry?
There is a lot of talk about regulation in the industry, and it depends who you talk to, as you absolutely said. The reality is that the best regulation is to be self-regulated. Private markets are effective. They are growing. They are financing the real economy. They are actually the go-to capital for many mid-market companies, whether it's private equity or private credit. And last but not least is financing some of the mega trends that we are seeing that need massive amounts of investment. For example, the energy transition or regenerative agriculture. So we are a sort of critical component at the moment of our economies. So whether you need regulation or not, what you need is the growth and the private markets to be present and cooperating with public money in order to drive some of these mega trends forward.
Right, and so you mentioned some of them, but I can't help but wonder, in 2024, what sector do you think is the real winner in the UK, in the Iberian Peninsula?
Well, we are very much thematic investors, and I've mentioned several times energy transition, climate change. Cybersecurity is another one that is critical, considering sort of the era and the technological developments that we are having. It's also an opportunity, but very much of a threat. So cybersecurity is one of the sectors that we are very much focused on. I mentioned regenerative agriculture, aerospace and defense as well. There are as you mentioned before, geopolitical tension. So having strong aerospace and defense sectors in our markets are absolutely critical as well. And we are there supporting companies with capital to make them stronger.
Carmen, that's an excellent place to leave it. We're going to have to leave it there. Carmen, thank you so much for joining. Francine, that was Carmen Alonso, Tikehau Capital's head of UK and Iberia.
That was a great conversation, Danny. Thank you so much. Danny, of course, is at EPEM, the private equity conference in Cannes. Now, we'll have plenty more, of course, from Cannes looking at private equity. Also, there's a little bit of breaking news across the Bloomberg terminal just minutes ago. This is from TASS, the news agency, and Russia has said that a plane carrying 65 Ukrainian prisoners has crashed. Now, this is according to the Defense Ministry spokesperson. We understand that there are 65 Ukrainian military prisoners on board, as well as 9 crew and guards that crashed in the Belgorod region near the border with Ukraine. Now, this is an Il-76 aircraft, and we understand that it came down again while transporting the prisoners for an exchange with Ukraine. That's according to the latest spokesperson of the Defense Ministry in Moscow. Now, there was no immediate indication of what actually caused the crash. We'll keep an eye on that. We'll also look, of course, at some of the economic news out there. We had some Eurozone PMIs earlier this hour. Now we have the UK January services PMI rising to 53.8. The forecast was 53.2. Again, quite a similar pattern, but also manufacturing was a touch better than expected. Nothing huge, and both numbers are below 50, which still indicates a contraction. Coming up, more from our conversation with the chief executive of ASML. That's as shares of Europe's most valuable tech company jumped today after it posted a massive beat on fourth quarter bookings. That's next, and this is Bloomberg. Well, SAP shares, one of the biggest gainers on the Stock 600 today, as Europe's biggest software company posted fourth quarter earnings beating analyst estimates. Now, the chief executive, Christian Klein, spoke to us about the company's investment in AI and growth prospects.
We are very confident about the growth potential of SAP until 2025 and the years beyond. And so SAP will also further invest. So we actually expect that at the end of the year, we actually end up with the same headcount as we left 2023. And for the years to come, there will be investments, there will be headcount growth, but of course, under proportional to our top line growth.
Well, the SAP chief executive, Christian Klein, speaking to us a little bit earlier today. Now, another stock gaining, ASML, Europe's most valuable tech company, jumping as fourth quarter orders more than tripled last quarter. Now, it's being seen as a sign that the semiconductor industry is actually resurgent. Now, for more, let's bring Bloomberg's Tom McKenzie, who spoke to the ASML chief executive officer earlier. Tom, it was such an interesting conversation. So what has the CEO been saying about his outlook?
Yeah, Francine, I'm on the ground at the headquarters, the global headquarters for ASML, as you correctly said, the most valuable tech company in Europe, and have been speaking, as you also said, to Peter Wenning, the CEO of ASML, on these blowout numbers for the fourth quarter in terms of the sales. 9.2 billion euros, triple the quarter, the previous quarter, and a lot of that growth coming from their clients, their major clients, including TSMC and Intel and Samsung, for these extreme ultraviolet lithography machines. The demand is there, it's been holding up, and the key question, as you say, for this CEO was whether or not he now sees a bottoming in this semiconductor market. Take a listen to what he had to say to me.
We see the first positive signs of recovery. So at the beginning of the year, we'd much rather be a bit conservative. But as you also saw, had a record quarterly order intake, which also bodes well for 2025 and perhaps the back half of 2024.
So to be clear, this semiconductor market has now bottomed.
That's what we believe. We see the positive signs.
And Francine, despite the fact that they had this record sales data, order numbers out for the fourth quarter, they actually have a pretty conservative outlook for 2024. And Peter Wenning telling me, the CEO, that the reason for that is a lot of their clients are going to be absorbing some of these orders through 2024. He said 2023 was a top year, 30% growth. He doesn't expect to see that level of growth for 2024, precisely because they take down some of those inventories. But he does see 2025 as a really significant year. And again, these extreme ultraviolet lithography machines, they make possible these most sophisticated chips that go into everything, of course, from our iPhones to the data centers that power the growth around artificial intelligence.
So, Tom, is ASML now at risk of losing the China market?
And that is the key question, Francine, absolutely the key question, because what we've seen in the last few years are ramped up restrictions, of course, on the type of equipment that companies like ASML can provide to the Chinese market. And it's worth noting that ASML has a complete monopoly on extreme ultraviolet lithography, so the most cutting-edge machines that can produce the most cutting-edge chips. No one else is able to do that. They have been restricted from supplying those machines and the generation prior to that, deep ultraviolet machines, into the Chinese market. When I spoke, Joe, to the CEO, he said, look, 90% of the market actually for them in China is the mature part of the business. He's not too concerned. But in the fourth quarter, you did actually see sales coming down in terms of sales to China. China was very important in terms of a market for ASML in 2023. But his message to lawmakers in Washington and indeed The Hague here in the Netherlands is, look, this is a finely tuned semiconductor ecosystem. If you put further restrictions in place, there is going to be a cost to pay. But clearly, he acknowledged national security is a legitimate concern, and clearly that's where the focus is for many lawmakers sitting in Washington. I also asked him, of course, about generative AI and what his clients are telling him, and he says that demand is very much there. The demand for compute that underpins so many of these AI models, whether it's Bard or DeepMind or OpenAI, the demand is there, and he says that is going to be a structural upside for ASML in the years ahead, Francine.
Tom, thank you so much. Bloomberg's Tom McKenzie there in the Netherlands with a wonderful recap of ASML. Now, on to transportation. Alaska Air says it has found loose bolts on many of its Boeing 737 MAX 9 aircraft following inspections after the mid-air blowout earlier this month. Now, Boeing says it is deeply sorry for the significant disruption to airline customers. Meanwhile, United Airlines is no longer counting on Boeing's largest 737 MAX model as manufacturing lapses threaten further delay. Well, let's bring in Bloomberg's Sid Phillip, who, of course, is one of our star reporters when it comes to aviation and transportation. I can't really get my head around about how many bad news we have on Boeing. Now, this also the fact that Alaska Air chief executive came on venting his frustration after Bloomberg wrote this story. So it was a Bloomberg scoop originally on Monday. Just if your customers turn against you, this is not great.
Yeah, it's terrible for Boeing because your biggest customers, especially United Airlines and Alaska Airlines, who are the biggest operators of the MAX 9, and also they have other Boeing models and Boeing 737 models on order, are sort of losing faith in Boeing. And so that is really the most significant sort of bad news for Boeing as they sort of try and get past this hump that they've had. I mean, the MAX 9's been grounded for 3 weeks now, and airlines are desperate to get the aircraft back into service. And so for Boeing, it's really sort of difficult to get sort of your biggest customers who are sort of now publicly commenting about how frustrated and angry they are.
Yeah, and 1 month you can see actually Boeing down 19%. How does Boeing turn this round?
It is really difficult for Boeing. I mean, I think airline CEOs as well as analysts have talked about how Boeing really needs to work on getting their quality up to scratch and make sure that they can basically produce quality aircraft. And that's really the key question for them. How do they go about sort of revamping their manufacturing process in order for customers to be reassured that their planes are basically quality and they make sure that the planes are safe and safe to fly?
Thank you so much, Sid Phillip, of course, for the very latest on Boeing, some of the ups and travails. Now, we did have some eco news earlier this hour. The pound actually already on the move higher before the UK PMI numbers hit. At the moment, they're relatively solid. Readings only bolstered that momentum. So look out for pound. Now, the other breaking news story that we're also mentioning, it's what's happening in Russia, saying that a defense ministry plane carrying 65 Ukrainian military prisoners as well as 9 crew and guards have crashed in the Belgorod region near the border with Ukraine. Now, this is an Il-76 aircraft. We understand that it came down while transporting the prisoners for an exchange with Ukraine. This is according to the Russian Defense Ministry. They announced that on Telegram, but there was no indication of what caused the crash. Coming up, Netflix has posted its best subscriber growth since the pandemic. We'll dive deeper into the streaming giant's fourth quarter earnings next, and this is Bloomberg. Well, Netflix shares jump in pre-market trading after the streaming service added more than 13 million customers in the last 3 months of 2023. Its best quarter since early on in the pandemic. Now let's bring in Bloomberg's Alex Webb. Alex, 13 million, this is a lot. Is it because the content is so good, or is there a trend that we could look at?
Yeah, there are a few different factors at play here. As you say, it is a big number. The market was looking for 8 million additions, so it's more than 50% beat on that. The two main things really seem to be, yes, content, as you say. They have had a few hit shows, Leave the World Behind, the David Beckham documentary among them, but they've also really managed to make headway on the efforts to stop password sharing, which forces people in different geographic locations who might be using the same password essentially to sign up for their own accounts. Around the edges as well, they are starting to make headway with their advertising supported model. They've got about 23 million advertising supported users at the moment, which, is about 10% of the little less than 10% of the total. So all those three things are what's really driving the change.
We also, of course, heard that Netflix is now buying live events. Is this a change in business model? How surprising is this?
Yeah, they've sort of been trying out a few things in this space with greater or lesser success. They have now agreed a deal to get the rights for Raw, a world wrestling entertainment property, for the next decade, as well as some other WWE events globally. It's interesting, it is a live event rather than sport per se, because a lot of what they do is ultimately scripted. It's a meaningful amount of money, and ultimately, they're trying to drive engagement, which live sports and live events can do in a way that, particularly when it comes to their advertising business model, that are incredibly appealing for some audiences.
Alex, what can you tell us about Tesla? So I know some of the Chinese manufacturers are really doing really well, and then we understand that Tesla may be looking at starting a production of a new car in 2025.
Yeah, there are a few different things happening. So the market is becoming increasingly saturated, partly the Chinese players, not least BYD, which has overtaken Tesla now as the world's biggest maker of electric vehicles. But we're seeing a lot of automotive incumbents really start to make headway in the space, companies like Volkswagen and so on. The prospect of them introducing new models reported by Reuters. It looks like it could be a crossover compact car. That's what Reuters is reporting. The market has been looking for a new model lineup, which they've not refreshed for some time. When it comes to the earnings a little bit later, the main focus is on what the guidance is going to look like for this year. They delivered 1.8 million vehicles last year. The market's looking for about 2.1 this year. So any steer around that will be keenly watched by market observers.
All right, Alex, thanks so much. As always, Alex Webb there with the very latest on Netflix and Tesla. Up next, Bloomberg Brief, Managed Cranny in New York. Danny Berger is in Cannes. So you'll have a full round of also some of the private equity news that we're seeing in EPAM. This is Bloomberg.